Welcome back to the Daily Crypto Roundup. Bitcoin has fallen back below $60,000. Ethereum is clinging onto support near $1,570. Gold and silver are being dragged lower. And now even CZ is saying there is not one simple reason for crypto's brutal 2026. This is one of those days where the market feels heavy, the charts look ugly, and the sentiment has gone properly cold. But as always, we are going to break it down properly, because the headline is not just Bitcoin is down. The bigger story is why Bitcoin is down, why Ethereum is struggling, why money appears to be leaving crypto and moving into AI, and whether this is the final shakeout before the next proper opportunity. At the time of recording, Bitcoin is trading around $59,500. Ethereum is around $1,566. XRP is around $1.04. Solana is around $71. BNB is around $551. Hyperliquid is around $62. Cardano is around 14 cents, and Chainlink is around $7.24. So once again, Bitcoin is weak, but the altcoins are taking the bigger hit. That has been the pattern throughout this latest move lower. Bitcoin bends, but the smaller coins break harder. Before we get into it, this show is supported by Kraken. If you are trading crypto and you want to support the podcast, you can do it by signing up through our Kraken link. It helps keep the show going, and we are also giving away 20 XRP to listeners who sign up through that link. As always, this is not financial advice. Only invest what you can afford to lose. So let's start with Bitcoin, because this is the main story today. Bitcoin has slipped below $60,000 again, and according to CoinDesk, it is now on track for something pretty rare: back-to-back losing quarters to start the year. Bitcoin was already down heavily in the first quarter, and now the second quarter is also heading for a loss. That does not happen very often in Bitcoin's history, and it matters because it shows this is not just a quick weekend dip. This has been months of pressure. The strange thing is that Bitcoin's second quarter has historically been one of its stronger periods. So when you get a weak first quarter followed by a weak second quarter, traders start asking whether the cycle itself has changed, or whether this is simply one of those ugly periods that eventually resets the market before the next major run. And right now, nobody can say that with total confidence. Bitcoin is down almost 7% on the week, but the real damage is in the altcoin market. Ethereum has been hit hard. Dogecoin has dropped double digits. XRP has been sliding. Hyperliquid has pulled back. Solana has actually held up a little better than many others, but even there, the mood is cautious. This is what happens when liquidity dries up. Money becomes more selective. Traders stop chasing risk. Bitcoin becomes the safer corner of a risky market, and altcoins get punished first. The big reason being discussed today is ETF outflows, a stronger dollar, and a more hawkish Federal Reserve. That combination is toxic for risk assets. If the dollar is strong, and if investors believe interest rates may stay higher or even move higher, then speculative assets lose some of their appeal. Crypto does not pay a yield. Gold does not pay a yield. Silver does not pay a yield. So when safer assets start offering better returns, investors ask themselves why they are taking so much risk. And that brings us into the second major story: the sell-off in gold and silver. This is important because for years, Bitcoin has been sold as digital gold. It has been treated as a scarce asset, a hedge against money printing, inflation, debt, and currency debasement. But right now, that entire trade is unwinding. Gold is falling, silver is falling. Bitcoin is falling with them. CoinDesk described this as the unwinding of the debasement trade. In simple terms, the debasement trade is the idea that governments print too much money, debt keeps rising, and paper currencies lose value over time. So investors buy scarce assets: gold, silver, and Bitcoin. That trade worked brilliantly for a while. But now, with the dollar strengthening and the Federal Reserve sounding more hawkish, the market is moving the other way. And this is where Bitcoin's identity crisis comes back. Is Bitcoin a risk asset like a tech stock? Or is it a hard money hedge like gold? The answer, right now, is both. And that is the problem. When risk assets sell off, Bitcoin gets hit. When hard assets sell off, Bitcoin also gets hit. So at the moment, it is being dragged down from both sides. But there is a positive angle here, and we need to be fair. Bitcoin has still outperformed gold and silver on a relative basis since earlier this year. So while the chart looks horrible in dollar terms, Bitcoin has not completely lost its place in the hard money conversation. The issue is that it is not immune. It can still get pulled into the same macro trades as everything else. Now let's bring CZ into the story, because the Binance founder has given his own explanation for why crypto has had such a sour 2026. And interestingly, he did not blame just one thing. He pointed to a mix of factors: AI sucking capital away from crypto, global tensions, and the normal 4-year crypto cycle. That AI point is huge. We have been talking about this on the show a lot lately. Money does not disappear, it rotates. And right now, a massive amount of speculative capital has been chasing AI stocks, semiconductor stocks, memory chip stocks, robotics, and anything linked to the artificial intelligence boom. If investors believe NVIDIA, AMD, Broadcom, ARM, Micron, and the wider AI trade are where the money is being made, then some of the hot money that might have gone into Bitcoin, Ethereum, or altcoins is going somewhere else. That does not mean crypto is dead. It means crypto is currently not the favorite child in the room. In 2020 and 2021, crypto was the exciting growth trade. In 2026, AI is wearing that crown. And when one sector is sucking in all the attention, all the headlines, all the institutional flows, and all the momentum traders, other sectors struggle. CZ also mentioned global tensions. That matters because when there is geopolitical uncertainty, people like to say Bitcoin should pump because it is outside the traditional system. But in reality, when fear spikes, investors often sell what they can sell. They raise cash, they reduce leverage, they cut exposure. And crypto, because it trades 24/7 and is highly liquid, often becomes one of the first places people hit the sell button. Then there is the 4-year cycle. This is the part that long-term crypto people understand best. Bitcoin and crypto have always moved in brutal cycles. Euphoria, blow off top, collapse, boredom, accumulation, then the next run. The question is whether this current decline is simply part of that cycle, or whether the presence of ETFs, corporate treasuries, regulation, and institutional money has changed the rhythm. We might not get the clean cycle people are used to. It may be messier now. It may be more macro-driven. It may be more connected to Wall Street than ever before. Midway through the show, quick reminder. If you are holding your crypto long-term, always think seriously about security. A hardware wallet like Ledger helps you keep your assets offline and away from exchange risk. Now let's talk Ethereum, because Ethereum is probably the most important chart after Bitcoin right now. Ethereum is trading around $1,570, and according to Crypto.news, traders are watching support around $1,583 very closely. The issue is not just price. The issue is what is happening underneath the price. Ethereum is under pressure from ETF outflows, weak spot demand, and whale selling. Analyst Ali Martinez said large holders sold around 550,000 Ethereum over the past week, worth roughly $880 million at current prices. That is a massive amount of supply hitting the market. And when whales are selling into weak demand, the price does not need much of a push to break lower. Ethereum has already lost the $1,633 area, and if it cannot reclaim that, traders are looking toward lower support zones. The key upside level is around $1,800. That is the level many analysts want to see Ethereum break back above before saying the pressure is easing. Until then, the chart is stable, but not strong. And that is the phrase for today's entire market. Stable, but not strong. Bitcoin is still around $60,000, but it is not showing aggressive demand. Ethereum is holding near support, but whales are selling. XRP is still above $1, but momentum has faded. Solana is holding up better than many, but it is not exactly flying. This is a market waiting for a reason to believe again. But here is the important part. These horrible periods are usually when the best future opportunities are created. Not because every coin will recover. They will not. Some projects will never see their highs again. But the market always becomes most emotional near the extremes. At the top, people think nothing can go down. At the bottom, people think nothing can go up. Right now, sentiment is cold. People are tired. ETF flows are weak. AI is stealing the spotlight. The dollar is strong. The Federal Reserve is hawkish. Gold is falling, silver is falling, Bitcoin is below $60,000. Ethereum is testing support. That is not a comfortable setup. But it is exactly the kind of setup where serious investors start watching closely. Not because they are trying to catch every falling knife, but because panic eventually creates value. The key now is patience. For Bitcoin, reclaiming $60,000 and then holding above it would be the first small sign of strength. For Ethereum, the market wants to see $1,633 reclaimed, and then eventually a clean move back above $1,800. For altcoins, the signal will be whether Bitcoin can stabilize first. Because if Bitcoin keeps bleeding, altcoins will struggle. But if Bitcoin finds a floor, the strongest altcoins usually show themselves first. So the verdict today is this. The market is weak, and there is no point pretending otherwise. But this does not look like one simple crypto-specific disaster. It looks like a full macro rotation. Money has moved into AI. The dollar has strengthened. The debasement trade is unwinding. ETFs are seeing outflows. Whales are reducing exposure. That is a lot of pressure at once. But crypto has survived worse than this. Bitcoin has been declared dead hundreds of times. Ethereum has been written off before. XRP has been doubted for years. Solana has had moments where people thought it was finished. And yet the market keeps coming back when liquidity returns, when sentiment resets, and when the next wave of demand arrives. So do not panic. Do not get shaken out emotionally. Do not over-leverage trying to be a hero. Watch the key levels, protect your capital, and remember that bear markets are where future bull market stories are usually born. That is it for today's Daily Crypto Roundup. Thank you for listening. Thank you for supporting the show. And if you want to support us through Kraken, the link is in the description. As always, stay safe, stay patient, and we will see you at the top.